This is Verizon on the monthly chart, and Verizon came down some months ago due to the headline of not only Verizon but AT&T's cable lines in the ground contaminating the surrounding areas with lead. However, since then, when they discovered that the cost wasn't going to be as great as it was to clean up, price did hit a bottom. Now the bottom on the monthly chart for Verizon coincided with this monthly bias level at $32, and since then price has been moving higher ever since then. Question is Verizon's stock a buy? Well, the chart suggests it is still a buy, as you have roughly $5 more before you hit some headwinds in the form of weekly sellers at $42.50. Before we look at lower time frame and before we continue with the analysis, let's just quickly look at this article. It is coming from the Motley Fool. Is Verizon stock a buy? Many readers are likely familiar with Verizon. The communications infrastructure giant is one of the leading phone and internet service providers in the US with nearly 144 million wireless retail connections and total three-quarter revenue of $33 billion. The issue, though, is that the business like Verizon that's critical to its customers' lives has made for a terrible investment. In fact, shares are down 30% in the last 5 years. As of this writing, Verizon's dividend yield is a healthy 7.1%. Even more encouraging is the fact that the quarterly payout has increased for 17 straight years, which is always nice to see, in lieu of the 30% down decline in the last 5 years. In the latest quarter, the business reported adjustable earnings per share of $1.22, which was almost double the quarterly payout of 67 cents. And though the first 9 months of 2023, Verizon generated $14.6 billion of free cash flow, that was more than enough to cover the $8.2 billion in dividend payout. Because the stock has significantly underperformed the market in recent years, it's dirt cheap on a valuation standpoint. Shares trade at a trailing price to earnings ratio of 7.6. This is down from multiples of nearly 14 just 3 years ago. As of September 30th, the business carried a whopping $147 billion of debt on the balance sheet. This leads to the highest interest payments that represented 19% of operating income in Q3. The entire company has a market cap of $158 billion. So the debt almost totals the market cap. Now, competition among telecom providers is incredibly fierce. That's because phone and internet services are commoditized offerings that are in extremely mature stages of their life cycles, particularly in the US. Perhaps the most important factor driving a customer's decision to choose a carrier is price. This doesn't bode well for Verizon's ability to differentiate itself. Indeed, Verizon's revenue of $137 billion in 2022 was just 8.6% more than 5 years earlier in 2017. All right, so I would say that the levels to have gotten long is down at this monthly bias level. Right, you had this rally in price, base and candles rally out, price came back, did not penetrate the zone more than 50%, making this zone still valid. As you can see here, yes, price pierced the bottom of the zone but didn't close below. Right, so this was a level to have gotten long. Now, based on these two green candles and this short green candle to start the month of December, you can see prices in an uptrend, and we can see that if we go to the smaller charts. This is the weekly chart. And again, this is making higher highs and higher lows, again, on the smaller time frames. Now, on the weekly time frame, what you can see is that the downtrend has been invalidated when price closed above this pivot high, roughly at $35. All right, so scrolling down to the daily chart, you could also see that price is now above all the moving averages. You have the momentum moving average of the 13 and the 26 pointing up. You have price respecting these two momentum indicators, moving averages. You have the 50-day moving average pointing up, and at some point potentially going to create a golden cross. That's where the 50 crosses over the 200-day. You have your moving average, you have your RSI, however, approaching oversold conditions. So here's the setup for me, as I believe that the stock is heading back to $42. You have this little area of interest here where there are buyers. So setup is the following. Buy on pullbacks, right? Price is overextended. You have the RSI overbought territories. Let's mark this at, just say $37 even. So is it still a buy? Not at the moment. Wait for a pullback. Wait for price to pull back. Let the moving averages catch up to price, and then you can take a long. Again, I would take some off the table, starting at $40, and then the rest at the weekly sellers level. Thanks for watching. Subscribe. Please like the video.